Evening, everyone. So thanks for taking some time out of your day to join us. It's great to be back. It's been quite a while since I've done one of these. Actually, I've been running around WageStream doing other things, and so haven't had a chance to do actually the first webinar I've done all year. So great. Took me till May, so it's great to be back. And I'm sure everyone's very excited to talk about the topic that is tax. And even though, the idea of talking about tax can sound a bit dry and people are like, oh, tax, and those kind of standard responses, it can actually be really helpful for you to understand what happens with your tax money. How are you charged taxes? How are taxes paid? Where do they go? And really important, are you paying the right amount? Because a lot of us just look at our pay slips and trust that between our employer and HMRC, they got it all right, and that it's right. But mistakes do happen, so it's good to be a bit clued up and know what amount of tax you should be paying, but also where to get help if you need it, because it can be one of those things that we're really we feel on the back foot and we don't want to engage with. Okay. Before we do that, as with all of our webinars, it's always good to give a quick little update on cost of living. So not a new term for any of us. We've been talking about this for way too long now. But just a good review. The energy price cap guarantee is still in effect at $2,500 per year. I'm sure most of you have now adjusted to paying significantly higher energy bills. And if you haven't adjusted, that hopefully you are getting some support. Always good to just shout out the in-app content that we've got under Hub. There are articles there around the cost of living. Some of those have to do with energy. So if you're worried about energy prices and any help that you might need, you can head over to the Hub and check that out there. The next thing is borrowing and interest rates. So last Thursday, actually, as we were sitting updating the slides at bang on 12 o'clock, the interest rate went up. So, this is a live thing, and we're now at 4.5%. Okay. So 4.5% is the base rate. That means that if you have a mortgage, as an example, that is on a base rate plus 2%, your mortgage would be 6.5%. Or some of you who maybe use credit cards will have begun getting notifications, and probably have been getting notifications for many months now, that your interest rate on your credit card is going up. Less of you than we would like, but some of you will have also received good notifications from those of you who are able to save a little bit, that savings rates have gone up. Unfortunately, savings rates don't tend to go up as quickly as the rates for borrowing, but things are getting better out there for savers. So 4.5%. It'll be another 6 weeks before interest rates are reviewed again. We will see what happens. And finally, the last consumer price index numbers we have were for March, 10.1%. So that number seems to be stabilizing a little bit, but still higher. And again, to explain consumer price index, that means that if you bought something for £100 a year ago, that same thing in March 2023 would have cost you £110. So and as that rate goes down, as the consumer price index or inflation goes down, that doesn't mean that prices are going to go down. It just means that prices are rising more slowly. So for all of you sitting today waiting for the price of things to start going down, with the exception of food and maybe petrol, it's unlikely that a lot of prices will go down. We'll just have to adjust to them being where they are, but we will see what happens. So that's our kind of standard cost of living update. Any questions on that, feel free to pop them into the Q&A, and I'm going to move on to tax. Right, we all love it. So what is tax? So it's something that we all get to pay, as if it's a privilege. So tax is one of the things we have to pay, right? If we earn a certain amount of money, and we'll talk about what that amount is in a moment, our income, or at least part of our income, is taxable. And that's what we know as income tax. And income tax goes to funding lots of different things, from the government and infrastructure, NHS, to all kinds of, different public services, benefit system, those types of things. Most of us probably pay tax at source. And that means that every month or every fortnight or whatever your pay period is, that when your pay is calculated and paid to you, that a percent of that is taken away in tax, and you never see that money. So most of us, when we think about our gross income, you might have a contract that says you earn £22,000 a year. you will never see £22,000 per year in most cases. You'll see something lower than that because tax is taken out. And that's what we refer to as net income. So most of the time when we're talking about income, people usually know how much money they take home each month or their net income or take home pay. So that's for most people. There are exceptions to that. So people could, for instance, be self-employed and therefore they need to do what's called a self-assessment. You could be a contractor in a limited company or through some other mechanism where you also might do a self-assessment. And also if you're on a very high rate of pay, so anything over £100,000, you may also be invited by HMRC to do a self-assessment because the tax coding system doesn't work as well for people on high incomes. But for the majority of us, we are taxed at source. It's called PAYE or pay as you earn. And you will see at least one line on your payslip that talks about tax. So I would suggest maybe while you're on the call, if you've got a moment, flip to your last payslip, take a look. You've probably got one online. Or if you have it lying around, just take a glance and just get a sense of what you paid in tax last month, and also try and find your tax code, because I'm going to explain tax codes here in just a little bit. If you're watching this on the recording afterwards, now's a great time to pause and go and grab a payslip or open up your app or however you see your pay and have a look at what tax you're paying. So how much tax do you pay? Well, you pay either 20%, 40%, or 45%. And that tax is graduated after a minimum tax amount. So for this tax year, the tax-free allowance for most people is £12,570. And what that means is on your first £12,570 of earnings, you're not going to pay any tax at all. For the next band, so that's between £12,571 up to just under £50,000, you're going to pay 20%, and that's a flat 20%. Okay, so for most of us, that's where we fall. We fall in that kind of 20% range. And that's what's called a basic rate or a basic rate taxpayer. For those of you who earn a little bit more, so over 50,000, the next bit of pay that you get is then taxed at 40%. And that's what people are called higher rate taxpayers. So you may see on some forms or in different literature online that someone talks about a higher rate taxpayer. They are talking about those people who pay 40%. It's really important to that you understand you're not paying 40% on your entire taxable income. You're only paying 40% on the amount above £50,000. And then the next tax rate is what's called 45%. And that's what's referred to as the additional rate. So you might be called an additional rate taxpayer, and that's where you would pay 45% on any amount over £100,000. So the maximum rate you would be paying would be 45%. And then some people will kind of try and calculate an effective tax rate, which is the blend of all of those. So maybe you earn £65,000. So that means between 12,571 and 50, you're paying 20%. And then on that additional 15% or 15,000, you're paying 40%, and you would come up with a blended rate. But those are how the different tax rates work. Now, that's a whole lot of things and a whole lot of maths. And some of you are probably saying, I have no clue what he just said, and I don't want to do with percentages, and it's all too complicated. You would be correct. And that's why it's great that there are people that do this for you. So one of the tools I can suggest, and we'll include this link in the email that comes out afterwards, is the salary calculator. So it's salarycalculator.co.uk. Brilliant tool where you can put in your take-home pay or your gross pay or your expected gross pay. You can put in some information around your personal circumstances, like are you contributing to a pension, and if so, how much, or are you repaying a student loan? Are you in receipt of any benefits? Do you live in Scotland? Because income tax rates in Scotland are slightly different because that's a devolved power. And that salary calculator will allow you to see how much you should be taking home on a weekly, monthly, an annual basis. It's also really, really good if maybe you're thinking about working more hours and you want to know, oh, I'm thinking about taking on more hours and working, let's say 10 more hours. What would that do to my take-home pay? Or maybe you've got a part-time job and you're thinking about taking on another part-time job or going full-time. You'll be able to run those scenarios with the salary calculator and understand what that would actually mean to you in terms of take home. Also, one of those things, some of you may have student loans, and you know that student loans are only repayable after you're earning a certain amount. So one of those things you want to consider is before you take on a job that's going to take you over that earnings threshold is, am I going to be better or worse off by taking these hours? Or actually, is all my money just going to go to paying the student loan and therefore it's not worth it? The salary calculator would be a really great tool to help you model that. So that's a tool that can be really, really beneficial. A couple of ways to find out. So that's talking about how much do you pay. Then it's around how much have you already paid. So you might be thinking, I want to look at last year and know what I paid. Or if we were doing this session in October and you've been thinking, well, how much have I already paid this tax year? There's a website on HMRC. So if you just Google HMRC online services, it'll take you straight to the website to log on. Some of you may already have a log on to that website. Because you might be getting things like child benefit or applied for some other benefits before or done other activities on the government website. If not, definitely worth going onto their website, signing up for an account, and then you'll be able to see your earnings real time. So every time you're paid, you'll see the amount coming in. You'll see all of your different employment. Let's say you've got 3 different jobs. You'll see the earnings from those 3 jobs there. You'll also be able to see your tax code for each of those, excuse me, which I'll explain in just a moment. What is a tax code? And then you'll be able to see what's your estimated earnings for the year. Estimated earnings are really important because estimated earnings are what is used to determine how much tax is withheld. Some of you may know that there are changes coming in your job. Maybe you're going to work more or less hours. Maybe you're going to drop an employment and only keep a part-time job. Things will change in your life. One of the options that you have on that website is to tell HMRC what your actual estimated earnings will be, and they will adjust your tax code accordingly. Sorry, I just need to get a drink there. They will be able to adjust your tax code. So for some of you who might feel like you're paying too much, that's one thing for you to go and look at. Make sure that your estimated earnings are correct that are there. Next thing, so what if you've paid too much or too little? It can happen. So the PAYE system, or pay-as-you-earn system that I talked about, works for most people and it gets it right most of the time. However, if you have multiple income streams, multiple jobs, then it may or may not work very well. And so it's really important to stay on top of it and also to then be able to estimate using that website if you've paid too much or too little. Now, if you're paying too little, then HMRC will very quickly realize that you're paying too little, and they will probably send you a change in your tax code so that they can start collecting tax that you might owe. So they're very good about resolving that very quickly. So it's unlikely that you've paid too little if you were on PAYE. If you, for instance, are self-employed or have other kinds of income, then it's possible that you're paying too little and you'll need to make that up at the end of the year and pay that tax. For those of you that are paying too much, maybe because the tax code was wrong or because now you're claiming some tax reliefs like a working from home allowance or something like that, then, excuse me, there are a couple of ways to deal with that. One, you can do a self-assessment at the end of the year and claim that back. There are also some simplified forms for other types of tax relief that you can get off of the HMRC website, and you'll see that there. So really important that you have a read of all of those different tax reliefs. A common one is, pensions relief. If you're contributing to a pension and you're a basic rate taxpayer at 20%, there's no relief necessary for you to claim because that's done at source. If you are earning over that £50,000 mark and contributing to a pension, you are probably due some tax back. So important to claim that relief back at the end of the year. But make sure that you get what's owed. Also, if you're doing things like charitable contributions and those types of things, you might be able to claim in that respect. If you have to have a certain uniform for work or certain courses that you're required to take for work, some of those might also be things that you can claim relief for as well. And then some of you've probably noticed, if you've been able to look at your payslip while I've been talking, or you've seen this before, there's tax and there's national insurance. And national insurance is a little bit different. So you'll see it on there. It'll either say national insurance or NI. National insurance is all about covering certain types of benefits. It's funding state pensions. So the expectation is when all of us turn 65, 67, 68, depending on how old you are today, that we'll get some money from the government in terms of a state pension. And it's your national insurance contributions that drive how much money you will get from the state pension. Now, there's lots of ways to get what are called national insurance credits. Working is the most common one. And to get your state pension, as an example, you need to work for 35 qualifying years. So that means 35 years of work. Or, for instance, if you were on maternity leave for 2 years and you claim child benefit, as an example, that counts. If you're on any kind of benefits for a period of time, that counts. So there are many ways to get national insurance credit. A topic for another workshop, but you will see deductions going out for both tax and national insurance. Okay, so that's kind of tax basics. So hopefully that's made some sense to you. Now, I've just taken or switched the slides. Hopefully you can see that. And I've mentioned a couple of times tax code. So somewhere on your payslip, you're going to see tax code, and it's going to look a little bit like something here in the middle where you see example 1257L. The standard tax code for this year for people who have no other situation in their life is 1257L. And what that means is you get the £12,570 tax-free, and that will be subtracted from your total income, and the rest is what you will pay tax on. So many of you are likely on 1257L. You'll see the different letters, they do have a meaning, and they're in the box below. So L standing for you're younger than 65 and you get the basic personal allowance. Again, so as long as you're under 65, that's what you get. Then there are some other things that could be happening with your tax code, and the government uses the tax coding system for a whole number of things, mostly to get you to pay back tax, or to realize that maybe they've taken too much and to return some of that to you. You may also have benefits. I see someone has popped a question in the Q&A, which we'll get to in a minute, about their car allowance. So you might be on a K. So that's if you have certain benefits that don't have a tax-free personal allowance, and that's taxed a little bit differently, which we'll talk about. If you see a BR, and this stands for basic rate, or also known as an emergency tax code, and this is very likely, especially for those of you who might have more than one job or just have started a job, and maybe you're new to work, or maybe you didn't have a P45 when you changed jobs, so your company wasn't sure what to do with you. So for the first couple of pay periods, you might end up on what's called a BR, basic rate or emergency tax code. What that means is they're going to be taking 20% of everything that you earn. Now, for some of you that might be fine, but for others who are below the £12,570 threshold, or you're on a, maybe a slightly higher wage than that, but not a lot, that means that you're probably being overtaxed. So we want to get you off of a BR, emergency rate tax code, as soon as possible. And a couple of ways you can do that is by going into the website, which I suggested before, to the HMRC website, and putting in your estimated earnings. The other thing is talking to your payroll team if you're on a BR, and making sure that they've either received your P45 from your previous employment, or that they've taken you through what's called a new starter checklist. And that new starter checklist asks a whole bunch of questions, which then allows them to determine what the proper tax code is. If you have two jobs, often you'll have your primary employment will have a tax code, and the correct tax code, and often your second employment will have the incorrect tax code, or the BR, because they don't know how to deal with that. And then that becomes up to you, again, going into the HMRC website and telling HMRC how much you expect to earn from all of those different employments, and that will allow them to calculate it, because really at the end of the day, only you and HMRC can know how much you're going to work. Okay, so it's really important, especially if you're on a slightly lower wage, you might be being overtaxed. If you see a BR, make sure that you go and take some action. If it's a Y, that means you're older than 75. Probably not too many of you on the call today older than 75, but if you were over 75, regardless of your earnings, you would be entitled to the maximum personal allowance. DO stands for higher rate taxpayer. That's currently set at 40%. NT would be not taxable. And then there are a few others, these little ones, oops, sorry. And those basically have to do with situations where HMRC realizes that they need to take some money off of you. So especially if you have an X, that means that they're probably charging you more tax than they normally would have, because they've determined that you owe them some money. If you have one of these tax codes, again, you should have received a tax coding notice either via email or in the post. If you haven't, and you're not sure why you have one of those tax codes, please log into the HMRC website and they will give you a very clear explanation there. You also have the ability to send them a message electronically. and dispute that or ask for clarification. And surprisingly, HMRC will actually get back to you, or they'll correct it. Sometimes they'll just see your message and then they'll take some action. They may not get back to you, but they might correct it. So they are reading your messages, and they can really impact your pay even in the same pay period, if you get it in before the cutoff. So very worth interacting with your tax code. Okay, so a couple of other things, and then we're going to get to questions. We've talked about tax code. Some of you may have heard of tax credits. So for instance, if you're on a lower income, or if maybe you have people in your family or you yourself has a disability, you might be eligible for some certain tax credits. So you want to make sure that you know what you're eligible for. And on the next slide, I'm going to talk to you about our Invest benefits checker that we have in our app. That will help you determine if you're eligible for any tax credits or other benefits. Also, if you're contributing to a pension, that's always helpful. So as I said before, you're going to get your first 20% of tax relief at source. So nothing happens or needs to happen from your side. But maybe you're looking to reduce the amount of tax that you pay. One of the legal ways to do that is to contribute more to a pension. So if you determine that you can afford to save more into your pension, great way to reduce your tax bill. Marriage allowances can also be helpful, and things like transferring tax allowances. So it's possible that in your household you have one person who's a high earner, and let's say that the other person either doesn't work or maybe has a job where they earn maybe sub £10,000 a year or something like that. You are able to transfer allowances between partners, which can be really, really helpful to offset some of the tax for the higher earner. Excuse me, making sure that you know the tax return deadlines, really, really important. So Hattie mentioned tax years. They always end around the 5th of April. They always start around the 6th of April. But tax returns are actually due 9 months after the end of the tax year. So the tax year just ended on April the 5th. And what that means is all of you need to have your tax returns done by the end of January. That's assuming that you do it online, which most of you probably would. So you have to the end of January to sort all of this out. I always suggest doing it earlier rather than later if you are going to do a tax return, because if you do end up owing money, you will have the ability to set up a repayment plan. So all of that money doesn't need to be paid at once, because that can be a big bill for some people. Or you have the ability to, if you're under, I believe it's £3,000, it used to be, it might have gone up a bit, but if you're under about £3,000 that you owe, you'll be able to have that taken directly out of your pay through your tax code. So that can be helpful instead of needing to come up with a big lump of cash come the end of Jan. There are also rebates that you might be eligible for, childcare vouchers, working home allowances. So a couple of ways to keep up on this. One is on the HMRC website. Two is signing up for things like Money Saving Expert. They have a lot of this information, and it does change from time to time, especially around the new tax year. Okay. So where can you get some additional information? I mentioned salary calculator already. Again, that link will come out in the email. Gov.uk and the HMRC website within Gov.uk has information for you. Citizens Advice has some very good detail. Within our WageStream app, within Hub, and you see a picture of our Hub screen there, you'll see articles, you'll see the benefits checker, other information, and finally the Invest benefits checker. And you see it there at the bottom of the screen under learning and resources. You can go in, answer a few questions, put in some of your personal details, and that will tell you what you might be eligible for, and then show you where you need to go to apply for those. So that can be really, really helpful in terms of accessing help that's out there. And there is actually a lot of stuff out there. Forget the number now. I think it was just something over £15 billion, I believe, goes unclaimed every year. So please, please, please check your benefits eligibility and make sure that you're claiming every cent that you're eligible for. We are all paying into this system. So, it's use it or lose it. If the money doesn't get to you, then the government will find something else to do with it. So I'd rather you had it in your pocket, helping your financial well-being than, being used on something else. So please make sure you use that benefits checker. And with that, I think we will switch to Q&A.
Amazing. Thank you so much, Erik. That was so interesting. I can see we've had like a ton of questions come in.
It's good to see everybody very engaged today.
Yeah, it's great. So we'll get through as many as we can. I'm really sorry if we don't get to them, but I'll cover the ones that have been asked a lot of times, so that we make sure that most people get their questions answered. I'm aware that we're like nearly at time. So if you need to go, don't worry, we'll record it and you'll get an email this week with the recording. So don't worry if you need to go and you miss the questions. But for now, we'll just start going through some of them, if that's okay. So to start with, Erik, this person said, if you're sort of working, but you're being paid cash in hand, how do you work out what taxes you owe and make sure that you're paying the right tax?
Great question. Yeah, particularly difficult when you're being paid cash in hand. So it's your responsibility to figure out what your total earnings for the year are expected to be. So if we take an example, let's say you've got a job that's paying you 15,000, and then you're getting another 5,000 cash in hand by doing something. You will then need to figure out that you're planning to make 20,000 pounds during that year. And if we go back to tax-free allowance, remember the first 12,570 pounds is tax-free. So you would deduct that from the 20,000 in that example. And on the remaining amount, you would take 20% because that remaining amount is lower than 50,000. So you would figure out what 20% is. And I would suggest you just open a savings account or a pot within, one of your accounts if you've got the ability to do pots, and put that money there so that you can pay it at the end of the tax year. Again, you can also go in and report what's called non-coded or non-reportable or non-reported income on the HMRC website. And what they might do then is if they see that your estimated salary or your estimated income is going to be higher, then they might start taking some of that tax out of your income that's PAYE, if you have PAYE income. If you don't, then that means at the end of the year, you're going to have to do a self-assessment and pay a tax bill. Be very careful. If you earn over a certain amount and you are doing cash in hand, the first time you tell the government about your cash in hand income and pay that tax, not only are they going to be collecting for you from the previous year, but they're going to assume that you're going to earn money cash in hand for the next year. And they're also going to take half of what they think you'll earn in the next year. And they'll want that payment on the very same day. So be prepared for that. If, for instance, you had a cash in hand job and you're not planning to have that, or you're planning to earn less, you can then on the form or on the website tell them that you dispute paying what's called an advance payment, and they won't expect that from you, but you'll need to put your case forward for that. So just be very careful. Cash in hand, the government very much wants to crack down on cash in hand because they feel like they're missing out, and it's not just tax but also national insurance, so remember that you will be liable for both.
Amazing. Thanks, Erik. We keep going because there's loads and loads of questions coming in.
Sure.
Generally, there's been quite a lot of questions about this. We'll just try and cover them all. And I know you touched on it just then, but when do you have to do your own tax return, and when is your tax automatically done for you by your employer?
For most people, doing your own tax return starts if you are earning over £100,000. If you earn over £100,000 a year, you absolutely have to do a tax return. But don't worry, our friends at HMRC will email you with an invitation to complete what's called a self-assessment. If you believe you need to claim certain tax reliefs, I can see some questions coming in here for tax relief for car mileage, for uniforms, for other things like that, for training, for healthcare costs, etc. That's when you need to do a self-assessment as well. Now, just have a look on a couple of websites on both the HMRC website, sometimes hard to understand. You can also go on to like Money Saving Expert, has really good guidance on this. There are simplified forms for things like mileage relief, so that you don't have, if that's the only thing you're claiming, then you probably don't need to do the full self-assessment. But if you are claiming multiple tax reliefs, then it probably makes sense for you to sit down and do a self-assessment. It's not difficult. You'll need a copy of your P60, which is the form that you get every year from your employer to say how much you earned, how much tax was withheld, and you'll be able to sit down and kind of knock it out pretty quickly. You can also get help from a tax preparer. There's also plenty of software packages out there that you can buy access to do your taxes. Before you go out and pay for that, though, have a look at the HMRC website. Personally, I haven't found it all that complicated. Some of the terminology can be difficult, but before you go and pay someone else to do it or pay for some software, maybe give it a go yourself. The other good thing about HMRC, if you put in incorrect numbers or get it wrong, guess what? They'll be more than happy to write to you and tell you that you're wrong. And they will then tell you that your tax has changed and this is what you now owe. And they will actually do it pretty quickly because it's all pretty automated on their side. So as long as you then engage with that and pay whatever's due, then you don't have to worry about penalties or other problems. But you know, the one thing you can't do is just ignore it, because they will find you.
Oh, thanks, Eric. I think we've got time for a few more, so I'm just going to pick the most popular ones. Had loads of different questions like, what if this is my tax code that's slightly different from what you talked about? This is my tax code, all sorts. Ones that ends in /0, ones that that have loads of different combinations, basically.
Yes.
How can people find out what their tax code is and what it means for them?
There are so many possible tax codes that we couldn't even try to do that in a 6-hour webinar, and I don't even know all of them. And not all of them are well published, because there are some really obscure things out there. The best thing you can do is, again, go and set up that account on the HMRC online services. When you go to your employment, you'll click on your employment, it'll show you your tax code, and it will tell you exactly what your tax code means. It will tell you exactly, as I explained to you here, in terms of tax-free allowance, if you've got any letters or slashes or other symbols, it will tell you exactly what each of those things mean. And in many cases, it will give you a pathway to correct that or change it if you feel that it's wrong or you can dispute it. So HMRC website in this case is your friend.
Amazing, thank you. And then I think we've probably got time for one more, and I'm really sorry if your questions didn't get answered, but I'll explain afterwards how you can ask Eric your questions, so don't worry. But can we just finish off, Eric, with people who maybe have another job in a different country or have moved to the UK and potentially have other incomes and things like that? Do you have any idea on what tax they pay and how it works for them, maybe differently?
Great question. This is a tough one. As a person who also moved to this country back in 2009 and was one of those people, I feel your pain. So basically, when you start working in the UK, you will be taxed from the month that you start working. Now, technically, you are considered a tax resident if you've been here for more than 180 days. So for most of you, you will need to pay income tax on your UK earned income. There are some exceptions where your global income for the year might be taxable, but there are also potential reliefs that you can claim depending on where you worked before, so that it's not taxable. So in particular, if you earned in an EU country and are also now earning in the UK, there are potential tax reliefs there. So it's, didn't all get lost at the point that Brexit happened. Unfortunately, that's what we call tax advice. And I can't give you tax advice, especially because there's so many combinations with other countries. I would suggest that you have a look at the HMRC website in their guidance based on the country that you came from, or maybe are now going to, or whatever your combination might be. If you're really struggling, there's a charity called Tax Aid, worth looking them up. They can probably explain it to you in just a few minutes. And I used to tell people to call HMRC directly, because pre-COVID, you can actually get through, somebody would answer the phone. I don't know if anybody's tried to call HMRC recently, but you'll be on hold for a few hours. So I would say try not to call them, use the online services. But yeah, Tax Aid as a charity is a great place to start. Or Citizens Advice will probably have some. You can pop down to your local Citizens Advice Bureau as well. And usually ask them some basic tax questions. Maybe there's a citizens advice office, near wherever you work. And if you're in a town or city center, they also do, run surgeries and have a phone line. But so there is help out there.